So on Euro Aussie, um, what we can see here is that the price is trying to break um, yesterday's market range. So you've got the lows of the day down here. This is marked. I mean, I can do a video on my chart setup. So I've got a number of templates. But this is a nice way to look at the weekly template. So the week starts over here, Monday, Tuesday, Wednesday, etc. And these boxes are the range of the day, um, governed by the volume profile here on the right. And the orange is the Tokyo opening uh, session, and then you've got Frankfurt and Wall Street. Um, and then what else do we have? And then these white lines are the prior days highs and lows. So going over to here, we can see that yesterday's high, so this is today, so yesterday's high was this white line. So if we move across, you can see that was yesterday's high. And then yesterday's low, which is over here, that white line. So we can see that the price is currently trying to take out yesterday's low. So naturally you find some support down here. And we're below the 20 EMA. I like to use the 20. We are below the point of control for the day. So the majority of the business was done throughout London mainly, right? And we're sliding away from there. So this is a market that's breaking down. So we can have our bias bearish or below the resistance, the trend line, what you want to call it. I like to pull. I like these all to connect. So as much as we can get connected. So call it there. Now, if we pull across, so if we get below this cluster of volume, if you look at it this way, that at the start of the week, the initial balance made a low down here, and this is the high. So you've got shorts in the market, okay, and then we came back up into those shorts. So people, moving a stop loss down or what have you, or holding the position from up high, we're getting squeezed. So this is a short squeeze. All right, so this is the pump up into shorts, and now we're coming back into these longs. So people here are in the money, okay, and we're now in a long squeeze, heading lower potentially. Now we're on Thursday, so we've got 1 day of longs, 2 days of longs, 3 days of longs, and this is quite typical of a market. You'll see these 3-day cycles. So 1, 2, 3. So you've got 3 days of length, and then a move into all of that length in a squeeze, right? And this can happen quite fast. And generally, what you like to see is you've got this peak formation here. You've got breakout traders now trapped, right? So we're moving away from all of this volume here. So I'll just mark that. So you've got trap volume, that's being put under pressure here, right? And we're moving away from that. Anyhow, if we can get below yesterday's lows on a close, that's what I said earlier, we want to see an hourly close really below there, then that will reinforce the thesis of a move into, this is the prior week's low. So this orange line is the prior week's low. So we go back to the prior week, see that open down here. Oh, sorry, what am I talking about? Bear with me. Yes, right, so the prior week's low. And we're heading back towards there. We've already taken that out, but we've got these longs that could be moved into. So we might be heading back down to here. So if that's the thesis, if we can stay on the front side of this trend, then that thesis continues. Now, I like M and W formations. Having done extensive analysis on these over the years, they tend to pull the price back up into the neckline. So drawing the Fibonacci on that bearish impulse, you can see that the market's moving up into that neckline. It's done a 38.2. Now for me, that's enough. A 38.2, I can start to look for an entry, but bearing in mind this can continue higher. It may even come up into the trend line. But so long as we stay below the 78.6, which is over here, around about there. So just call it around numbers, 165.50, because you might get a stop up into the 50s. You could have a wick up into there and pull back down. We're staying bearish. So you've got this volume cluster here. You've got the 61.8 that's marrying up with, let's mark it out. Let's mark out that low. Which marries up. So if it gets above that high, it's probably a quick move up into the 78.6 and then maybe a little bit higher. But anyway, so if we move down, this is a 15-minute chart, by the way. On the hourly, we've got the strong impulse and engulfment and potentially move up. Maybe it might start to stack, and we're starting to get a little bit late in the equities hours, so but it's pretty volatile out there. We've got non-farm payrolls tomorrow, so I don't know that we're going to see much more activity. We'll have to wait and see. Anyway, but sticking to this 15-minute chart, we can start to look for signs of deceleration in the correction, considering it's moved up to 38.2. That's a pretty steep move up. So if you bring that onto a 1 minute chart, no, it's smoothing out. So you've got the structure. At this point, you want to start looking for structure. And you might say, well, look, if it gets below there, then that's going to give me an indication that this doesn't want to go any higher, and you'll be looking for your setup for a short. But as I said, it's quite volatile out there. Anything can happen. We could, let's see if we don't see a test above 65 figure again. Those highs is a move up towards maybe 65, 65.10. We've got more resistance over here. potentially higher lows. Okay, so it's going to come up into here and start to peter off. And as it does that, you can start bringing up your structure point to a reasonable level, and you'll be starting to build your trend line, looking for a break off that, and then short. So worth keeping an eye on.